for coming into this session of this trade live precise trader September 11th. And today is news trading. And do take note of the risk disclosure. Day trading in foreign exchange is risky. Past results are not indicative of future returns. The content of this webinar is mainly educational purpose and use your information entirely at your own risk, and you must assess the risk of any trade with your broker before you take in your trade. Also, please take note of the ground rules. Respect the fellow attendees and the presenter. Mute your mic when the presenter is speaking and use the chat feature to ask questions. And please ask questions only related to trading. And for those of you who are logging in from YouTube, okay, I think you would not be able to ask questions because I think you need to register and come into the session. Okay, why Precise Trader? Okay, we have about 30 years of experience and our system is very unique, whereby you can trade without using the chart future. Okay, basically the system would do all the groundwork for you. Okay, meaning whether is it like you want to decide on the trade and whether you want to choose your instrument and whether do you want to put in where the trades and all the answers you can get it from the system. Of course, you can tally it with the chart if you are a professional trader. Okay, the the system has got zone price alerts whereby this gives you an alert, and this would tell you the trigger the levels for you to take in your trade. The most powerful in our system is the dashboard, whereby the dashboard will give you an entry, exit, and stop loss level. And we also have a trend map that would also give you a bird's eye view of the trend that is trading on the market. And at the same time, this would also tell you like whether the trend is whether it is within a range or whether this is trading outside the range or so on and so forth. In short, just one sentence should give you uh, an answer. That means like what you intend to do on the trade setup. Later, I'll be showing you and I'll be sharing with you. That means in one sentence, like for instance, like what is the hourly trend doing? What is the daily trend doing, and what is the weekly trend doing? Then we can decide on the trend and the trade setup. Then the next tool which we'll be using is the PT zones. This will give you a bird's eye view of all the markets. Okay, the difference between the trend map and the PT zones is that PT zones will tell you where the market is trading. The trend map will tell you what to do. Okay, meaning whether to be a buyer or seller. Uh, uh, this will tell you what to do, and this will tell you where is trading. Okay. Then we also use the strongest and weakest. That would also help us to decide on the best cross to trade. And we also provide live signals, like 5 types of signals, whereby scalping, news, day, momentum, and swing. Okay, all these 5 types of signals will tell you what is the type of trade we are going to trade. And we also provide a strong backend support, whereby this would help you to take this as a career. And we do recruit traders, but provided you follow our system. Okay, I'm sure you all have your own system, which we may not be interested, because we want you to follow our system and our method, so that we can bring in you and we can train and we can use a simple and straightforward system and application. The products which we offer, mainly we offer in Forex, mainly euro, pound, dollar, yen, dollar Swiss, Aussie, dollar CAD, New Zealand, Sing dollars, and any one of these crosses against each other. And all the crosses against each other. That means like we provide all in all services about 36 to 40 crosses. And we also provide services on metals like gold and silver. And we provide services on futures like mini Dow, Nasdaq, S&P, Russell, and DAX. And also the commodity instruments like crude oil, natural gas, corn, wheat, and so on and so forth. Okay. Today we are going into the live trading. Okay, and do take note that today is a news trading. Okay, news trading meaning this is the signals which we provide. One of the signals we provide on the news trading. That means the CPI, US CPI data that is going to be out, and we have to give you the call pre-announcement and post-announcement. Okay, so the data right now is 1952 Singapore time, and the data is going to be out in 2030. Okay, another 38 minutes. Okay, and what the market, the CPI month on month, the forecast is 0.2, and CPI month on month is 0.2 as well. Okay, year on year is 2.5. Okay, and we also have a 1030 crude oil inventories. Okay, what we are expecting or what the market is expecting is the data to be bad. Okay, anything worse or below 0.2, this would give us the dollar weakness. And anything higher than 0.2, then this would give us a dollar strength. And as expected, let's say the market is expecting 0.2 and the data came out to be as expected, then chances are this is going to be a mixed signals, meaning a range trading. Okay, and what we expect for tonight is, okay, we are expecting, because of course, when we trade on the news, we got to stick to one side of the market, or we got to stay in one side of the market, because we cannot be saying, like this happens and this is what we do, and this, of course, we got to stay, because the reason being is because of the slippage. Okay, slippage meaning we cannot put a stop buy or stop sell order, because we might get a very bad fill unless, if the breakout happens. Okay, breakout happens meaning uh, uh, that means the market breaks certain levels. Okay, so we like as I told you, we got to stick to one side of the market. Okay, now what we are going to do is, I think I've chose the wrong one. Okay, this is a trend map. Okay, the trend map, what the trend map is telling us, okay, this is for those of you who are coming first time to our session. Okay, it's a very simple, straightforward tool, very powerful and effective tool. Okay, so what the trend map is telling us, remember I told you beginning of the session, in one sentence, we got to get the information of uh, the instruments which we are trading. Okay, in short, white boxes meaning flat, green means up, red means down. Okay, on the left we have all the currencies, on top we have all the time frame and time belt. So now, when we look at, like for instance, right now, okay, we can trade, like for instance, like daily. Okay, daily zero. Zero means current time belt we are looking. So we have a dollar yen, which is a sell, dollar sing, which is a sell, and this is daily and the weekly. So that means this is telling us that we should be selling this cross, provided if the data is bad. Okay, if the data is bad, this two market is expected to go lower, and we expect the price to continue uh, going down. So on the other hand, if let's say the data comes out to be good or as expected, then this two might be in a range. Okay, this two crosses might be in a range. Then we have your 360. Okay, 360 is showing like your dollar Swiss is showing some strength, Aussie dollar is showing some strength, and dollar cat is showing some strength. Okay, but but your daily is still flat. Okay. Okay, now remember I told you in one sentence we got to come to a conclusion. Okay, like let's say I give you a statement for dollar yen. Okay, the dollar yen, how I'll give the statement is this is the market is sideways down on the daily and weekly, and congestion down on the 360. Okay, so that means what is telling is the market is expected to go down on the daily and weekly, and congestion down means that means we don't expect the price to break the 360 high. It is right now, this is range on the 360. So we should get our benchmark level. That means we should see that your 360 high as a benchmark level, and we should not be expecting the market to break the 360 high. But if let's say the data come out to be better than expected, or the data expected to be a good, uh, then we may get a extension on these two crosses. Then the market may start to come down. Okay. Okay. Well, for those of you who are coming first time, don't get yourself confused. Okay, of course, I'll be telling you how to trade and how we are going to put in the trades. Okay, so now we need to know, right now, we are expecting the market to be like dollar yen to come down if the data is bad, dollar sing to come down if the data is bad. Then we have your dollar Swiss, which is 720 is down, but your daily is flat. So that means there is a high chance that dollar Swiss may come down as well if the data is bad. Okay. Then we look at gold. Okay, gold is also telling me that this is daily is up, 360 is up. So that means if the data is bad, gold is expected to break higher. Okay, so that means we are going to get, if the data is bad, we are going to trade uh, dollar Swiss, dollar yen, gold, and Sing dollar. On the other hand, if the data is good, then we may be trading euro dollar, pound, Aussie, Canadian dollars, and New Zealand. Okay, so just write down, take a piece of paper, write down all this. Of course, I'll be sharing with you the spreadsheet as well, so at least you can take a screenshot and we can do it. Next, when we go into the PT zones, that should also give us the same answer. That means dollar yen, dollar sing to be a selling. Okay, see where it's trading. See, dollar yen is trading at S3, and daily previous day is also S5. That means this is a good sell. Then the dollar sing is trading at S1, and your previous day is also S1. Okay, so that is also agreeing. So now your PT zones are telling that we can go for a buy on the Aussie and we can go for a sell on the dollar CAD and we can go for a buy on the euro dollar. So this is we are getting a mixed signal on the PT zones. Okay, but of course we look at the dashboard, then finally we come to a conclusion and we try to take on from there. So now let's look at the dashboard. This is our final call based on this, and of course this is where we are going to get all the levels, entry, exit, and stop loss. So then what we'll be doing is, of course, we should be referring to the chart, then finally we put in your trades. Okay, so right now if we look at the dollar yen, okay, right now this is trading at 141.76, and what we should be expecting is your current day high is 142.50. So we should not expect this is going to be our benchmark level 42.50, and a closer one would be 42.10 and 42.20. Okay, these are the two closer levels. So in other words, if the data is good or bad, we should not see the price for dollar yen going beyond these two levels, 42.50 and 42.10 and 42.20. That means three levels, right? So now let's say we scroll down, look at the previous day. Your previous day also tells you that 41.95 is critical, 42.30 and 42.50. So overall, what we conclude is we try to sell dollar yen near that level, or just 2 minutes before the data out, we try to sell because this is trading near the resistance levels, and we got to make sure that the price breaks lower, or we try to exit before 140.70. So that means if we sell, we must make sure that the 41.65 breaks, then the 41 breaks, then we see the price going lower. Otherwise, this is going to be in a range. Okay, now let's say we go into the 360 and we get all the final figures. Okay, now when we look at our 360, okay, this is will give you the exact trading for this trading band or the trading time belt. So right now is 41.80. So we see a resistance at 41.95. Then 42.10, 42.30. Remember early on we saw these figures at 42.50. That means we should not see the price going above 42.30 and 42.50 if the data is good or bad. But if it's bad, we expect the price to break lower. If it's good, then probably we may get a spike up. Then we should be selling near this level, and we should see the price being in a range or trading band. Maybe after it settled down, then we may see the price lower, but it all depends on the market conditions and where it's trading. Okay. So now, what we expect, okay, I'm just telling you what we expect is we are expecting the data to be bad, and we don't see the price breaking 142.10 or 42.30 or 42.50, any one of those three levels. And if the data is bad, we should see the 41.60, 41.40 break. Then we should see the 41.05 break. Then if all these levels break, then we should see the price moving lower towards 40.20. Okay, on the other hand, if let's say the data is good, then we may get stopped out, we may get price moving higher. And again, it all depends on the strength of the data. That means the market is expecting 0.2. Let's say it came out to be 0.3, then we may get a spike up, then fail. But if let's say the data came out to be very strong, 0.4 or even higher, then the sentiment might change. That means, the market may become bullish on the dollar. Then the sentiment may change because, the next interest rate, right now, I mean, of course, the market is expecting 0.25 cut or maybe, even higher, but it all depends on the markets, I mean, the data out, right? So now we are going to take a call. Okay, based on this, of course, we would be tallying it with the chart. Then we try to put in the trade. Then we'll see how it comes, how the data comes. Then eventually we try to uh, uh, get out with a profit so that we don't miss that opportunity. Okay, so as of now, okay, ask yourself whether are you a conservative trader or are you a aggressive trader. So if you are an aggressive trader, then what you should be doing is you should be trying to sell at 41.95, okay, or 42.05. Your stop loss definitely has to be above 42.50. So that means if you risk, okay, you risk about 45 pips, okay, for 50, no, 55 pips, 55 pips, right? Your risk would be about 55 pips. But on the other hand, once you sell, if the data is bad, we should see the price breaking 141.60, 141.40. Then, we see 141.05 or even lower, right? So your TP, what we should be doing is you may want to put at 41.10 or 40.75. And if you really feel that you want to fight for the news, then if this level breaks, then we may see the price moving lower, provided if the data is weak, right? So now what we can do is okay, if you coming back to the thing, okay, if you call yourself an aggressive trader, put an order to sell at 41.95 or 42.05. See whether your order gets filled. In the event, if let's say you don't get your order filled, then probably you may want to enter at the market just 1 minute or 2 minutes before the announcement. Then we got to put our stop here. Then we put our TP at this. If let's say you are a conservative trader, chances are you may not get your order filled, but you don't want to take unnecessary risk. So what you can do is you may want to put a sell at 42.30 or 42.40, then put your stop at 42.55. Okay, then you see whether your order get filled. If it fill, you're lucky, you may get it. Otherwise, if you're not, then chances are you may have missed the boat, or then only the aggressive trader might be in the trade. So this is the difference between aggressive trader and a conservative trader. Now, let me go to the chart. Then I'll give you a final call. Okay, so based on the chart, okay, there is a huge barrier near this level, which is 41.95. Okay, so we may see an extension towards 42.40 or even 42.70. Okay, we may see an extension. depending on this. So looking at your RSI and your uh, stochastic and all and left time. So we can put an order near 42.05, okay, and put a stop at 55. That means a 50 pips risk, okay. Then we got to see whether that 41.30 breaks or 41.10 breaks. Definitely these two level breaks, then we can expect the price to go lower, okay. So based on this, yeah, I can give you, let me go change the screen. Let me go to the spreadsheet. Okay, so this is what we expect. Okay, this is what we expect. Uh, if the data, I mean, we of course we got to stick to one side. Basically, if the data is bad, that means anything below 0.2, then is considered the data is bad. Okay, the anything below that is considered the data as bad. Then we may want to put just give me a minute. Just give me a minute. Just 1 minute. Okay. So now, if the data is bad, we expect gold, dollar yen, Swiss franc, Sing dollar to be in the limelight. That means we will be selling dollar, and we expect there would be a big move on all these four crosses. If the data is good, then we expect the euro dollar, pound, Aussie, CAD, New Zealand, all this to be weaker against the dollar. We should be buying this crosses against this crosses. As expected, we can trade any one of this, but what is going to happen is overall we should be will be staying in the dollar side, and we may want to trade any one of this, any one of this, but it has to be within the trading band. Okay, when I said within the trading band is meaning we should be applying our dashboard, and we should be trading within that level, right? So now, as of now, like again, I told you, we want to sell dollar yen, and we are betting that the data is going to be bad. So we are expecting this thing to be bad, and we want to trade dollar yen. Okay, this is sell. Okay, and what the boundary we are looking at is 141.10 and 142.50. Okay, this is the boundary, because that means when we say boundary, that means you should exit before these levels. Of course, if the data come out to be very bad, then we may see the price breaking lower. Okay, that is up to you. But our job is we come here, we want to take a trade, we want to get ourselves an opportunity, and we want to exit with a profit. So the stop we put 142.55, and our target we want to put as 141.10. Okay, entry, like as I told you, we can enter. If you are an aggressive trader, you enter at 41.95. If you feel you're conservative, then you may want to enter at 42.30. Okay, so this is what then you can put in your orders like this. Okay, meaning I want to sell. Okay, this is okay. I want to put myself as an aggressive trader. Okay, why this is showing 141. 95, 142.35. Let's see whether this, yeah, okay. So entry level, we want to sell at 141.95, stop at 142.55, and exit 141.10 or lower. Okay, but of course, this is the risk reward. This is, I think, this you have a risk of about 50, 60 pips risk and 80 pips reward. Okay, 80 pips reward. If you feel you don't want, then probably you may even exit at 40, 140, 75. So that would be another 120 pips. Okay. Again, this is remarks. We are expecting the data to be bad, and this expiry is we put at 21. That means half an hour within the data out. So what we are going to do is we are going to do a pre-announcement trade, and we are going to do a post-announcement trade. That means after the data out, okay, then we will see how whether the data is good or bad, then probably we may. And another thing I want to emphasize is, see, when you trade on news, okay, this is going to be like a hit and run trades. Okay, please do not if you feel okay, like by any means, like for instance, okay, you are betting the data to be bad, and let's say the data came out to be good, and the market, see, straight away you decide to close the trade and wait for more clues where the direction and how the market is going. So that means you don't really fight beyond certain level. That's what I'm trying to tell you. A news trading application means you got to trade only during the announcement, and the decision has to be the next 10 minutes. I wouldn't say you don't even allow 10 minutes. Of course, if it's in favor, then we can wait. That means, like for instance, like if you are going for a sell, you are expecting the data to be bad, then the came out to be bad, and the market is not moving anywhere, then you can wait. But on the other hand, you are you are betting the data to be bad and it came out to be good, then you got to decide and you got to close the trade, and you got to wait for the next move. Okay, so this is a very clear cut. This is, we got to strictly follow the rules, and we don't do any things, and we don't change any ideas, before this, because this has to be strictly, then only you can make money. Otherwise, it's going to be quite dangerous. Okay, so the next tool or the next instrument we can trade, we can look at, remember, dollar Swiss, and remember we told you that we are expecting we are betting on the bet, right? So maybe we'll try to look at gold or dollar Swiss. Okay, this either one. Okay, let me go back to the system and we get the levels. Okay, gold, if the data is bad, okay, if the data is bad, you see, like dollar yen, we have already seen the breakout. That means the market is already broke the previous day low or previous week low and is trading. So we already seen the break. Okay, the only thing is we may see the price in a continuation, or we may see a price in a range. Gold, okay, we have not seen the break, and we should be expecting the break to happen if the data is bad. Okay, and when I say the break, that means we should see the 25.26 to break, and today's high is 25.27. So that means we have to see this level break, or your previous week high, the 29 half should break. Then we should see at least 35, 37. And if the 37 breaks, then this is going to be a very big move happening. Okay. So now, where is our entry? Where would be our stop loss? And where would be our target? So again, you call yourself as aggressive trader and conservative trader. So if you're a conservative trader, you got to exit before 31 half or 30 half, 29. All these are resistance levels. But if you are an aggressive trader, then wait for this level to break. Then we may see the price pushing higher, towards even 36 or 40 or even 43. And you can be today might be a very big move, happening if the data really disappoints. Okay, that is what we feel. So now the market is trading at 25.18. Okay, why would our entry be? Okay, we can buy at 13 half or 25.08. So these are our buying levels. Okay, then where do we put our stop? Okay, let's say we look at today. Okay, today I think there is a strong support at 2505. Okay, we don't see the price going below 2505 or 2500. Okay, these are the two levels of support. 2500. These are the two levels of support. So that's where we need to put our stop loss. Okay, so now we are good to go on this. So what we do is we try to put our entry levels, okay, at 13 half or 2505. Again, ask yourself whether you are a conservative trader or whether you are an aggressive trader. Okay, let's go and okay, we look at gold. Okay, it's getting ready for a break. Okay, this is going to be a make or break scenario. If the data is bad, we may see a break. If the data is good, then it's going to be a range and failure again. Then we may see the price going lower, right? So if you ask me, our entry point, okay, we can go for an extension of this move, which is somewhere 10 half, okay? And remember our stop loss, okay, has to be below. Remember, I told you earlier on was 2505 and 2500. So in other words, what we can do is, okay, this is all, I don't know whether your risk reward permits. Okay, we can enter. Okay, then again, maybe I want to put myself in to the comfort zone of this instrument because I don't want it to take too much of risk. Then what I want to do is I want to call myself a conservative trader on the goal because I don't want to take too much of risk. Okay, again, we are betting the data to be bad. Sorry, bad. And we are going to trade X gold. Okay, this is again, this is buy because we are uh, uh, going to go in the direction. So the boundary would be, remember that 2500 half. Okay, this is 2500 half and 2529 half. Okay, these are the boundary levels. So that means, if this level breaks, either level breaks, then market can move in either direction. But overall, we got to do. Okay, time is running out. We only have 4 more minutes. Let's do a quick one. So the stop we want to put at 2499, and the target is we want to fight, see whether the data is good. So maybe we don't put our target first. The entry we try to enter at 25085. Okay, this is where our entry. So that means there is a $8 risk. Okay, I don't know whether do you want to take this kind of risk. If you feel, if you are not comfortable, then I don't force you, unless you feel, if you are think, then you can do it. So 25085, sorry, 25085, stop 2499. Okay, 99, and TP I don't want to put because I want to see whether the data is bad. If the data is bad, we might see the high break, then it can go lower, I mean higher, then we try to exit much higher. Okay, we don't want to put any price target. So again, the rest of the conditions all are same. Okay, that means bad, and so the same thing, we can put a quick one, a dollar Swiss. Okay, we try to sell. Okay, we try to sell a quick one at 84. Uh, okay, we try to take 3 trades. Okay, right now bad. Okay, we are trading, so we want to sell a quick one. So we try to, the boundary here is dollar Swiss is 85. Okay, let me get the figure quickly. We are running out of time. Okay, there's 2 more minutes. Okay, 85.40. Okay, 85.40 and 84 84.20. Okay, so this is the boundary level, 84.20, 85.40. Okay, so we want to sell near, stop 85.45, sell at 84.95. Okay, sorry, target is, we see whether the price, okay, target maybe we'll put in later. Okay, entry we try to sell at 84.95. Okay, put in this order. We still have 2 more minutes. Okay, we're running out of time. Let's put in this order, and this trade is I can say is also aggressive trading because of the stop loss. But if you feel you want to put a conservative traders, then you try to sell at 85.10 or 85.20. Okay, time is running out. Okay, let's change, and let's go the screen for the data. Then we see how is the data. Okay, 1 more minute. Okay, we got to, this is the problem with news trading. So we got to get ourselves do all our work and get ourselves prepared, so at least we don't miss the trade and we don't get anything missed out. Okay, so anything, the data, anything better than sorry, worse than 0.2 is data is bad. uh, Either we get the same data, then we have to see how the market responds, then we quickly close our trade and we see how we can go about. Okay, data is out, good luck, and we see how we can trade this. Okay, so now how is the data? Okay, you see it's coming better than expected. So 0.2, that means it's better than expected, so we might see the dollar strength happening. Okay, we might see the dollar strength. And the CPI month on month is same as expected, and the CPI year on year is same as. So we have one data that is better than expected. So what is going to happen is the market may have a slight pullback, that means slight strength on the dollar, and we should see the market getting stable. Okay, let's see any of our order field. Okay, your dollar yen, I think our dollar yen we got as filled at uh 141.95. And if you're a conservative trader, your order also would have filled at 42.30. Okay. Let me see whether my order got filled. Yeah. So I I have sold at 42.30. So I'm a conservative and my stop loss I put at 42.65, and we got to wait for some time. Okay, wait for the time and we see how we can trade, because this is, see, this kind of trade, this is a calculated risk, and I wouldn't say we are taking too much of risk. And let's see our gold, whether this gold is right now is 2512. Okay, gold is not filled yet. Dollar yen is filled, and dollar Swiss, I don't think is filled or not filled. Okay, well, let's wait for a while. So we, whatever the strength, okay, another thing I want to tell you is whatever the strength you are seeing, I don't think the strength may last more than 15 minutes. Okay, so you see the dollar yen now, I think is turning, is coming off. I think we are making about 15 pips on the dollar yen. See, right now we shorted at 30, so it's coming off. We'll just wait to see whether the market is, because we have one good data and one bad data, so the market can move on either direction. But what we are trying to say is this strength should not last should not break I think the previous high. Okay, of course, if it breaks, then we are wrong. And right now, what we see is if this thing breaks, then probably this is going to be the major low. But on the other hand, if as long as that 50 doesn't break, we can still expect this market to be in a range, and it can be coming down. Okay, let's see the gold. Gold, we expect still down a bit. So, but overall is okay. What our sentiment now is, because we don't expect the high to break. Chances are, we try to buy and we try to close our trade before 22. So now the sentiment has changed a bit. That means we are not expecting uh, so-called a big move happening. So probably we may see a range on this. On the other hand, let's see whether euro dollar. Okay, the euro dollar, I think all. Yeah, let me share that screen. Remember, I told you if the data is good, then we may see the dollar strength against the euro, which is happening, against the pound, which is happening, and Aussie. I think Aussie is flat, and this New Zealand is we are seeing the strength, and Canadian dollars is flat, so not much movement. So we just have to wait for this trade to work its way out. Okay, now what we intend to do is, since one data came out to be better than expected, so we don't be very optimistic optimistic in our price target. Okay, so the dollar yen, I think I want to close my trade at 42.05. Yeah, I want to close my trade at 42.05 because I I don't see any big move happening. Okay, the same thing gold. Okay, now I think our order will get filled, so the TP now should be lower. Okay, the TP now we should bring it lower because we don't expect any big move happening. Okay, so so this is how we just have to trade the levels, and we just wait for another 8 more minutes. See, whatever the strength we are seeing now, we should not see the strength more than 8 more minutes. Of course, if it lasts more than 8 more minutes, then chances are the strength may continue on the dollar. Okay. Okay. Any questions or any doubts you want to ask? Okay. Okay. So if you don't have any questions, then the next session we would be seeing is on this Friday. Okay, this coming Friday, same timing. So if you are interested, please come in and join the session. You see, the gold is breaking lower. So if you're a conservative trader, then probably you may want to buy near 2503, 03 or 02. So at least the risk is not that much. Yeah. So let's wait to see how this thing comes. And if you feel you try to also tighten your stop loss, because if you don't risk, because the data is came out to be better than expected. Okay. Okay. So with that, I conclude today's session. Thank you for coming. Looking forward to see you again, and good luck to see how the thing, because now I think we expect the dollar strength to come in. Okay. So just be careful, especially if it doesn't give you the result or the response as we expected, then the best thing is try to close and try to re-enter and have better levels. Okay. Thank you. Good luck and see you again next week. Thanks. Bye.